Alphabet reported its full year 2023 earnings on January 30th. Revenue was the most ever in the company's history, but the shares sold off on the news. Though to be fair, Alphabet's share price did break out to all-time highs. No one ever went broke from taking a profit. Let's look at the details. Revenue was $307 billion, up 9% year over year. Gross margins improved slightly to 56.6%. Operating profit was $84 billion, or about 27% of revenue, up 12.6%. Net income was up 23% to $74 billion from 2022. Very good results. Indeed, if you look at the 5-year income statement highlights, we can see Alphabet's profits continue to grow, though at a slower pace. Revenue's 5-year growth rate has been 13.7%, but the last 3 years it has just been 6%. Gross profits have been growing at 14% for the last 5 years, but also just 6% in the last 3 reporting periods. Operating profit too has slowed. Its 5-year growth rate was 20%, where the 3-year growth rate is just 2.3%, and net income growth has been flat over the last 3 years, while it has been growing at 16% since 2019. Moving to the business segment revenue, those segments are Google Advertising, Google Subscription, and Google Cloud. Google Advertising is Alphabet's big moneymaker. This business line has grown from $135 billion to $230 billion since 2019. That's a 12% growth rate, but only 4.3% growth rate in the last 3 years. Subscriptions have been expanding by 15% in the last 5 years to $35 billion, though in the last 3 years it's just been 7.4%. Their cloud business has been its biggest growth segment. 5-year growth rate has been 30%, but 3-year has slowed to 20%. Still good growth indeed. Google Cloud revenue finished 2023 at $33 billion. Drilling down to look at their advertising segment a little more granularly, Search, YouTube ads, and Google Network make up Google Advertising. Google Search is the big money earner in this segment. Search grew by 12% in the last 5 years and 5.5% in the last 3 years to $175 billion. YouTube ads has slowed in the last 3 years to just 3% growth compared to the last 5 years, where it's been 16%. YouTube ads finished 2023 at $31.5 billion, and Google Network growth has flattened out for the last 3 years, finishing 2023 at $31.3 billion. Moving to the ratios, shares outstanding contracted by 437 million in 2023. Alphabet's been buying back shares for the last several years. EPS was $5.80, better by 27% year over year. Sales per share were $24.20. Cash per share, which doesn't include marketable securities, is $1.89, but if we add marketable securities, it would be closer to $8 per share. Book value is $22.27, up 14.4%. The PE is 24.6, which is pretty close to the S&P 500 at 26.5. PE growth is 0.9. Leverage ratios at Alphabet are very low. The company has very low debt. The debt ratio at 0.03, the equity ratio at 0.05, and interest coverage is 273 times. Well covered for the short-term obligations. Liquidity ratios are also strong, 2.1 for the current, 1.9 for the quick, and 0.29 for cash. Return on assets for 2023 was 18.3%, up 12% from 2022. Return on equity was 26%. Return on capital employed came in at 26% as well, and return on invested capital was 25%. Cash flows for 2023 were strong. Operating cash came in at $101 billion, the largest ever. Investing outflows were $27 billion. Financing outflows were $72 billion, and free cash flow to the firm was $24 billion, up 10% from 2022. Google doesn't pay dividends, but we wonder when they will start to. Enterprise value is $1.8 trillion. That gives it a 5.9 multiple to revenue and a 75 multiple to free cash flow. Market cap to income is 24.6 times. Key takeaways from Alphabet's financial statements. Well, on the pro side, what can you say? Google has a solid balance sheet, good liquidity, good cash, good return on investment, no debt. On the con side, growth is slowing, particularly in the advertising business. The cloud business is growing fast, but only makes up 10% of revenue. Alphabet pays no dividend, if that's important. There is some antitrust litigation looming in the future which could impact market sentiment. We give Google a neutral rating because it's trading at its all-time high. It's difficult to buy a stock when it's trading at these levels. We have no exposure to this company. Like and subscribe.